Hello, I'm Kevin Flynn, and welcome to another edition of Avalon's Market Minute for June 30th, 2013. Stock prices reversed their slide last week with an impressive 3 days of triple-digit gains in the Dow Jones, coming in between some losses on Monday and Friday. But you'll probably be glad to know that the market is primed to keep going higher for the next 2 to 3 weeks. Some positive buyer sentiment has been restored, and if you read any of my columns, you'll know I've been making the case that the market is about to get a case of Goldilocks fever. Indeed, I think they were already getting it last week. Goldilocks syndrome is the idea that the economy is growing just fast enough to keep corporate profits growing, but just slow enough to keep the Fed from doing any tightening of monetary policy. Last week's good news in housing and bad news in the revision to first quarter gross domestic product was just the right mix for the Goldilocks faithful. Of course, I should also mention the most important part of the Goldilocks theory, which is that it's another reason to buy stocks. The housing and auto sectors putting up good headlines, the first of the month rally coming on Monday, and the traditional pre-4th of July rally on tap, all we need is for Friday's jobs report to behave, and we'll be well on the way for another run back to the highs. I'm not quite sure we'll get there this month, or even at all, but that's the general direction. Another plus for sentiment is that monetary conditions are likely to get easier in China for a while, now that their quarter has ended and the scramble for balance sheet cash has ended with it. On the other hand, that still leaves Europe and the Middle East to worry about, so it's no time to get cocky. But the market would like to go higher, and events on this side of the pond have a good chance at being benign enough to help it get there. The Fed's recent big moment rattled markets the week before last, but the anxiety seems to have settled down in the face of many assurances that the Fed will only act if the data is good enough for it to act. To be honest, it's probably the majority opinion on Wall Street that the economy is not going to be strong enough to act by September, which could bring some excitement at that Fed's press conference. But that's more than 2 months off, and in the meantime, we have to get through second quarter earnings season. That might be the thing that derails the current rebound, so don't plan on Goldilocks moving in just yet. She's probably just here for a visit. I'm Kevin Flynn, and thanks for listening to Avalon's Market Minute.